really covers the full picture of where tech, crypto, and markets are heading next. Because today we're not just talking about price, we are talking about the future of devices, the future of AI infrastructure, and also the growing risk inside crypto that many people might still underestimate. So, if you want to understand what is changing behind the scenes, not just what is trending on the surface, please stay with us because there is a lot to break down. We will start with China, where a new AI hardware race is taking shape. Chinese AI glasses are moving so fast and they may already have something Meta does not. These are not just smart glasses with a small screen on the side. Some of these products put a display right in front of your eyes, and the use cases are getting very real. We are talking about from teleprompting to navigation to QR code payments, even voice controlled daily tasks. So today we'll break down why this matters, why users in China seem more ready to adopt this kind of devices, and why the next big AI battle may not just be about software. It may be about who controls the devices you use every single day. Then we'll move from the device on your face to the giant machines behind the AI boom, because Oracle just made a major power move. And this story shows something very important. The AI race is no longer just about chips, it's also about electricity. Oracle is locking in massive power capacity for its AI data centers, and in the process, it has already made a huge paper gains on its Bloom Energy deal. So it will explain why energy is becoming one of the biggest hidden battlegrounds in AI, and why companies that control power may end up controlling the next phase of the industry. After that, we'll turn to one of the most shocking stories in tech, the reported attack involving OpenAI CEO Sam Altman. If these developments continue to unfold the way they are being described, this may become a major turning point in how Silicon Valley thinks about AI security, public fear, and the real world consequences of the AI debate. This is no longer just a conversation on the internet. It is becoming something much more serious. So, we'll look at why this story matters not just as a crime story, but as a warning sign for the entire AI industry. Then we shift into crypto markets because Wall Street is still trying to price the next phase of the Bitcoin story. TD Cowen has just cut its target on MicroStrategy, so MSTR, but at the same time, it is also highlighting a new wave of smaller digital asset reserve companies. So we will look at what that tells us about the market. Is the Bitcoin treasury model still attractive? Why are the new players trying to follow MicroStrategy playbook? And how much risk is really building underneath these trades? Because in a market like this, the upside story gets the attention, but the downside risk still matters. We'll also cover a very important crypto security warning. A fake ledger app appeared on Apple App Store. Well, that's an interesting one. One user entered his recovery phase and nearly 6 Bitcoin was gone in seconds. This is the kind of story that reminds everyone in crypto that security is still everything. No matter how advanced the market gets, one wrong move can still wipe out years of savings. So we'll go through what happened, why this is so serious, and the simple rule every crypto holder needs to remember. Then we get into a very wild exploit story. A hacker managed to mint 1 billion wrapped dots, so DOT tokens, polka dot tokens. On paper, it looked like $1 billion hack, but in reality, the hacker walked away with far less because the market collapsed under the weight of the fake supply. It sounds crazy, but this story tells us something important about DeFi, about bridges, liquidity, and even a huge exploit does not always end the way hackers expect. And finally, we close on a story that is blowing up the entire crypto space and also politics. Justin Sun versus Liberty Financial. So there are big accusations, big personalities, and serious questions about control, transparency, and whether some projects are selling decentralization while still keeping the power behind the scenes. So we'll break that down too, because this is not just about some drama. It goes right at the center of what crypto is supposed to stand for. So today's show, it has a little bit of everything, I would say. Like we talk about AI, Bitcoin treasury companies, crypto scams, a lot of crypto scams, DeFi exploits, and some political drama inside crypto. And the reason you should stay all the way through is simple. Like these are not random stories. They are all connected by one big theme. Like technology is moving fast, capital is moving fast, and risk is building just as fast. Some companies are building the next wave, others are already running into the weak points. And that's why we are breaking it down here on Roxom TV so that you know both sides very clearly. Without further ado, let's jump on to the first story of today. And I do want to start with AI gadgets, so AI hardware. And there's something very interesting happening in China. AI glasses are starting to take off. And right now, Chinese company may be ahead of the US one. So what is the difference? Like you might ask. So here we have the glasses of Rokid. So in the US, products like Matters glasses, smart glasses, have a small screen on the side. But in China, it's different. So the screen is actually displayed. So there's a full display in front of your eyes. So instead of looking away, you see information directly in your feed. So there's a picture of what the display could look like. I'm going to zoom closer so you can see the teleprompter, the whole style of the teleprompter thing. These glasses are not cheap. Like some are even more expensive than competitors. Well, let me know if you can see my screen. Okay, there you go. So that's how the glasses looks like. Like these glasses are actually not cheap. Like some are even more expensive than competitors, but they are still selling better. There is one simple reason, because of this teleprompting that I was telling you about before the screen pop out. So these glasses can show text right in front of your eyes. So if you are giving a speech, you can read your script without looking down. And this feature is becoming very popular, especially among business leaders and officials. And these glasses are not just for reading text, they can also help you in daily life. So, for example, you can navigate while riding a bike. You can order coffee just by speaking. You can control smart home devices. And here's the key point. You can even pay using QR codes just by looking and speaking. So the glasses are not just a gadget. They are becoming a real tool for everyday use. Now, this is not staying only inside of China. If you guys are interested, here's the website. So Rokid right now is selling $279. So it's a spring sale. I mean, I'm not being sponsored by this smart glasses at all. It's just I was checking out myself as well. So Rokid, they are actually selling in places like the UK and also Canada, and they're pushing to grow globally. At the same time, Alibaba is also preparing to expand overseas. Meanwhile, Meta is facing delays due to strong demand and supply issues. So competition is really heating up. The AI glasses market is expected to grow quickly this year. Global sales could jump more than 70%, and that is a huge increase. But there is still a catch. This is still an early market. Not everyone is using AI glasses just yet. In China, users are more open to new ways of using devices. They are interacting with tech in a daily life. So features like voice control, display screens, and payments are more quickly adopted in China. So that gives Chinese companies an advantage. They can test, they can improve, and they can absolutely scale faster. But now, let's be real. This technology, okay, this looks very interesting. well, I'm thinking of ordering myself one. Like you can choose the prescription, you can change the color of the lens, polarized one. It looks interesting. There you go. But like, okay, this is still very early, and there are still a lot of concerns, especially around privacy. Like people may not be comfortable wearing cameras on their face, and hardware adoption is always hard because people don't change their habits easily. But here's where things get interesting. Some companies believe AI glasses could eventually replace smartphones. Because if you think about it, instead of looking down at your phone, everything is right in front of you, literally in front of you. You can talk to your device, you can see information instantly, you interact with the world in real time. That is a very different feature. So the bottom line is, when we are looking at news like this, yeah, China's AI glasses are definitely moving very fast. They are adding real use cases, not just features like Meta. Okay, you can use the camera and I don't know, to do some sports in a first person angle, for example. But like the China one, you have different use cases. We just talk about the teleprompting. We just talk about payments and daily tasks. Like these glasses are becoming very practical. And while the US still leads in AI models, China may be moving faster in AI hardware adoption. So the next big wave, big tech battle may not just be about software. It's also about who controls the device you use every single day. So, diving into more AI news, like let's actually move from the hardware and your face to the massive power plants behind the scenes. So, Oracle is making a giant bet on energy and is already paying off in a huge way. So, in just 4 days, 4 days we're talking about, Oracle has made over $300 million on a single investment. So, let's break it down how they did it. So every big tech company has the same problem right now, is that AI needs enormous amount of power, like a lot of it. Standard electric grids are too slow to keep up with AI data centers. So Oracle is taking matters into their own hands. They are working with a company called Bloom Energy. So Bloom makes fuel cells. These are like mini power plants that sit right next to the data center. They don't need to connect to the main electric grid. That means like Oracle can build faster than anyone else. So here's where the business part gets very interesting. Last Thursdays, last Thursday, Oracle got a very special deal, and they were giving a warrant to buy $400 million of Bloom Energy stock. They got a fixed price of about $113 per share. Then on Monday, Oracle announced they are expanding the deal with Bloom. They want enough energy power to power millions of homes. As soon as that news hit, Bloom Energy stock price absolutely exploded. So right now it's down a little bit, but it jumped to over $203 a share because Oracle locked in that lower price last week. That investment is already worth $300 million more than what they paid for. That is a massive win in just 96 hours. And Oracle is not playing small. They plan to get nearly 3 gigawatts of power from these systems. Just to give you an idea of the scale, like that is enough to power a very large city. The goal is to have this all running by the year of 2027. So Bloom's CEO says the AI infrastructure must be built like factory. Like it needs purpose, it needs speed, and you can scale very easily. Oracle is spending a lot of money to make this happen. They have raised over $100 billion in debt just to fund these massive AI data centers. And it wasn't just Bloom Energy having a good day. So if we hop onto Oracle stocks, Oracle also jumped 13% on Monday. Investors are starting to realize that big software companies are the ones who will control the AI future. Even though the stock has been down like quite significantly, if you actually zoom out on Oracle price, so we reach a high of more than 300, so 328. So it's down quite significantly. Like the Monday's rally that we just saw is telling us something like this is the power play. Like Oracle is making sure that they have the electricity they need before the rest of the world runs out. So the bottom line is the AI race is no longer just about who has the best code. It's also about who has the most electricity. Oracle is securing that on their own power supply. They're skipping the waiting list for the electric grid, and they are making hundreds of millions of dollars in the process. In the world of AI, power looks like it's the new gold, and we are just getting started. All right, so we'll take a short break from here. When we come back, we are diving into a nightmare story in AI. So a lot of the CEO, a lot of the builders in the AI industry is actually feeling very intimidated by this event. So if you're intrigued, do stay with us after the break.
This is Alex. Alex spends most of his time thinking like a trader, still deciding what to do with his Bitcoin. While Alex waits for the perfect entry, this is Laura. She's watching the S&P drop. Everyone is suddenly a macro expert. She doesn't panic. This is Tom. No screens, no noise, no stress. While Tom focuses on his swing, his Bitcoin focuses on compounding. Because Bitcoiners don't want more dollars. They want more Bitcoin.
I want more Bitcoin.
The best move is letting your Bitcoin work while you plan the next one. Grow by Roxom. One currency, one place.
Oh, I forgot to mention, dividends on Roxom are paid in Bitcoin. Stretch your income, 11.5% paid in Bitcoin.
Stretch your income to 11.5, get 11.5 in Bitcoin and Roxom. 11.5%. 11.5%.
Welcome back to Roxom TV, and thanks for sticking around with us after the break. We're now shifting to a story that is both very shocking and deeply concerning. It involves a direct attack on one of the most powerful people in tech, OpenAI CEO Sam Altman. What we thought was a single incident has now turned into a major criminal case. Federal prosecutors have released new details today, and the details are quite intimidating. This was not just a protest. Prosecutors say this was an attempt to take a life. So let's take a look at what exactly happened last Friday morning. So this incident is started in the middle of the night at roughly 3 a.m. So here we have the suspect here at the bottom. So Daniel Garma. He arrived at Sam Altman's private home. He wasn't there to talk. He threw a lit Molotov cocktail at their house. The fire hit the top of the driveway gate. Thankfully, no one was injured, but the suspect did not just stop there. Less than 2 hours later, he appeared at the OpenAI headquarters. He threw a chair through the glass doors. He shouted that he would burn it down and kill anyone inside. Police arrived and arrested him on the spot. Once the suspect was in custody, police found something even more terrifying. There was a document titled Your Last Warning. In this document, the suspect wrote that he had already killed or attempted to kill Sam Altman. He didn't just target Altman, he made a list. So there are names and addresses of other AI executives, board members, and investors. He was very organized and he was targeted. And according to the FBI, he was extremely serious about doing this. So the question everyone is asking, why did he do it? The suspect was motivated by a deep hatred of artificial intelligence. The second part of his document was titled Some More Words on the Matter of Our Impending Extinction. He told investigators that he believes AI is going to end the human race. He viewed Sam Altman as the man responsible for that end. In a letter written directly to Sam Altman, the suspect wrote, so, if by some miracle you live, take it as a sign from the divine to redeem yourself. This is a level of radicalization we haven't seen in the tech industry before. The legal consequences are now hitting hard. San Francisco District Attorney is charging him with attempted murder, but it goes higher than that. The Department of Justice is also involved. He is now facing federal charges for using explosive and for the possession of a firearm. The FBI said this was a deeply concerning escalation. It was not a spontaneous act by all means. It was a planned, violent attack on a private residence. The nightmare for Sam Altman actually did not end on Friday. On Sunday, there was a second attack. This time, there was gunfire. 2 more individuals were arrested. The FBI even conducted a separate operation in Texas related to these events. Sam Altman's home is now a crime scene. The security around these tech leaders is changing forever. Sam Altman posted on his blog after the arrest. He shared a photo of his family and he said something very honest. He said he underestimated the power of words and narratives. He admitted that the last few years has been very intense, chaotic, and high pressure. He says the way we talk about AI as something that could destroy the world is having real-world consequences. This story is forcing a massive change in the tech world. So for years, tech CEOs actually walk around like celebrities. But now, things are different. The AI doomer narratives has moved from the internet to the real world. Companies like OpenAI, Google, and Meta are now spending millions more on executive protection because the fear of AI is no longer just a debate. For some, it has become a reason for violence. But what about the impact, right? How does that affect businesses? OpenAI is trying to keep its employees safe. So they thank the police for their quick work, but inside the company, the mood is definitely off and it's quite heavy. Like, how do you continue to build the future when people are trying to burn down your house to stop it, right? The pressure on these companies are at all-time high. The bottom line is, this is a wake-up call for Silicon Valley. Technology is moving faster than society can handle, and when people are afraid, they become dangerous. The attack on Sam Altman is a very dark milestone in the history of AI. It shows that the extinction debate is no longer just a philosophical question. It is a matter of life and death, and this is still a developing story. We'll bring you more updates as the federal investigation continues. So let's shift gears a little bit, and I do want to dive into the financial news a little bit. So this story is about like the battleground for Bitcoin. It's no longer just for the giants. We all know MicroStrategy, the company that made Bitcoin famous on Wall Street, but today the analysts at TD Cowen are changing the playbook. They just issued a massive report that shifts the focus. They are looking past the big names and pointing at 4 hidden gems, so-called hidden gems, of course not financial advice here on the channel, 4 hidden gems in the digital asset world. Let's take a look at why the Bitcoin reserve model is about to explode. So first, let's talk about the leader. So MicroStrategy, of course. So let's look at this title. So TD Cowen lowers MicroStrategy price target to 350. So it actually went down from $440 down to 350. That is a 20% drop. So you could ask why, right? Like, because the analysts expect Bitcoin's growth to slow down slightly in 2026. But don't be fooled, like they still gave the stock a buy rating. MicroStrategy currently holds over 766,000 BTC. The strategy is quite simple, which is to use that to buy more Bitcoin. As long as the price of Bitcoin goes up, the company wins. TD Cowen has mapped up 3 what-if scenarios for the end of this year. So there's the base case, bull case, and the bear case. So the base case is that Bitcoin hits $140,000 by December this year. Bull case, it might go up to $175,000. Bear case is all the way down to $25,000. So we are seeing the range is pretty high here by the end of this year. So from $25,000 all the way to $175,000. That's why I'm taking this kind of predictions with a pinch of salt. So in the worst case, MicroStrategy would have to stop buying entirely, but TD Cowen thinks the base case is most likely, and that is why they are officially tracking 4 smaller companies that follow the similar path. So here are the biggest gems on the list, so 4 gems. So the first one we're talking about is Nakamoto. So Naka, that's the ticker symbol if you guys are interested. So this company is actually founded by David Bailey, a man who advised President Trump on crypto. They don't just buy Bitcoin, they also own pieces of other crypto companies and media outlets. Right now, the stock is really cheap, so 22 cents. But TD Cowen has a target price of $1, so that is a massive, a massive more than 300% potential gain. The risk, though, they have $210 million loan due soon. So if they can pay that off, the stock could absolutely skyrocket. The next one on the list that TD Cowen give out is Sharplink. So of course, Sharplink, that sounds like a very familiar name. If we go to strategic ETH reserve, of course, that is the list of the public companies that are putting Ethereum on the balance sheet. And as you can see, Sharplink is sitting at number 2 on the list. The first one is of course Bitmine. So Sharplink over here, everyone knows what they do. They focus on Ethereum rather than Bitcoin. They hold right now 863,000 Ethereum coins. But they don't just let the Ethereum sit there. They actually stake their coins to earn extra interest, like a digital saving account. So TD Cowen set a target price of $16. That is more than double where the stock it is right now. So if you believe in Ethereum, this is again the stock to watch. The third one on the list that they gave out is Stripe, actually. So ticker symbol ASST. So let's take a look at the stock right now. What they do is that they are an asset management company that treats Bitcoin as the gold standard. They buy more Bitcoin every single week. They recently added another 113 coins to the pile. TD Cowen likes that disciplined approach, the DCA. So the target price is actually $26. And as you can see, based on today's price, they're hovering around like $11. I mean, it rose to $12 at some point. It was just like a few hours ago. So that represents more than 2x return, like based on what TD Cowen expected. Like they have enough cash to survive for 18 months, even if the market gets messy. So this one is another interesting potential gem that they recommended. Finally, we go across the ocean and then to Smarter Web Company. This is a UK-based company that goes web design, that does like web design, but they use all the extra money, extra cash to buy Bitcoin. They are the largest public holder of Bitcoin in the UK. So TD Cowen calls this a dual track model, like the business pays the bills and the Bitcoin builds the wealth. So the fourth and final gem that they give out. Now, let's be very clear. This is not for the faint of heart. Like TD Cowen warned about 4 major risks. The first one is, of course, volatility. Like if Bitcoin crashes, these stocks crash even harder. Second risk we have to be like aware of is that like governments could change the rules at any time. So second concern I have is regulation. The third is leverage. Like these companies use debt to grow. That can be very dangerous. Like if Bitcoin goes up, of course, like everyone is happy. But what about the other way around, right? So the fourth concern I have is security. Like if they lose their private keys, that means the money is gone forever. And security doesn't just apply to individuals. Like, of course, like individuals, we bear a huge risk by clicking the wrong button. We're going to dive deeper into some of the horrible scams, horrible hacks later in the show. But this also, like point being, security also apply to institutions as well. So not just individuals. So bottom line is the Bitcoin reserve era is here to stay. TD Cowen believes that this is a brand new industry. Companies are no longer just making products. They are building digital treasuries. MicroStrategy is the king, but these 4 smaller players are hungry for the throne. If Bitcoin hits $140,000, these stocks could be the biggest winners of the year. So the crypto market never sleeps. So do you stay with us for more breaking financial news like this? All right, so I was teasing about security. So let's actually dive into a horrible event that just happened 2 days ago. So let's talk about security. This story is a reminder that in crypto, one small mistake can cost you absolutely everything. So what just happened is that a user lost nearly 6 Bitcoin, and that is over $400,000. And this was not even a hack, not a smart contract bug. It was a fake app. The victim downloaded what looks like the official Ledger app from the Apple App Store. I absolutely have no idea how a fake app got onto App Store because like it's not Google we're talking about. So I have no idea what is the process that listing process for App Store. Looks like it's losing trust. So let's break it down. How does this happen? How the attack happened? So the user was setting up a hardware wallet. So he searched for the Ledger app. He found one that looked real. He downloaded the app and followed the instructions. Then came the critical moment. The app asked for his recovery phrase, and that's the 24-word secret that controls your wallet. He entered it, and within seconds, all his Bitcoin was gone. Because this breaks a key assumption. Like this is very, very, very serious. Like many people believe if it's on App Store, it must be safe, right? But this shows that even trusted platforms can still have fake apps. So this is not just a crypto problem. It is a platform risk. Everyone is asking this question, like, can you file a report to the FBI and recover the funds? Now, here's the uncomfortable truth. It's very unlikely. The stolen Bitcoin was quickly moved and sent to exchanges wallet. So SatXBT actually was tracking this a little bit on X. So that is the gentleman that lost that money. Once fund moved fast across multiple addresses, it's actually becoming very difficult to track and recover. And in most cases like this, the money is gone. So that is this is a very important point. Never enter your recovery phrase on any online device, not on your phone, not on your laptop, not inside any app, because the moment you type it, you lose control. A hardware wallet is designed to stay offline. If you bring that secret online, you break that protection. And here's the bigger issue. Scams are getting smarter and getting better. There are fake apps, there are fake emails and fake websites. Some look like very identical to the real thing. So it's getting harder to tell the difference. But there are simple rules we need to follow. So for example, only download apps from the official websites. For example, if this gentleman is using the ledger, maybe how about scan the QR code that from the actual ledger, but ordering that ledger, make sure it's from a legit website. So stuff like that. Always double check links. Never trust ads or random search results. And more importantly, if any app asks for your recovery phrase, it's probably a scam, no exceptions. The bottom line is this wasn't a technical failure. It was a trust mistake. So one wrong click, one wrong input, then boom, 10 years of saving gone in second. Trust me, I've been there. I've been hacked before. It's a little bit similar to this gentleman. So yeah, I mean, I really understand how he feels right now. It's really frustrating. But looks like what happened to him is very unfortunate, even more fortunate than my mistake in the past. But we are in crypto, and a lot of us just happen to learn it the hard way. And if you're watching the content right now, I hope that person is not you, because I mean, we have been there, and I hope that from watching these educational content, it might help you some way. Anyway, so speaking of, let's actually hop onto Bitcoin and do a very quick Bitcoin charts update a little bit, because Bitcoin has been a rally, so it has been quite joyful. We are sitting at $74,800. So people are very optimistic about the market. So maybe we are out of the wood yet. However, since I covered the charts extensively on yesterday's show, if you want my really deep analysis, I highly recommend to check out yesterday's show. But from the daily candle, we actually not much has changed. Not gonna lie, I talk about daily, weekly, and monthly from yesterday's show, and it looks like it's just doing what I predicted it was doing. So as long as I'm not gonna discredit the rally that we are seeing today. I mean, it is quite a generous rally. However, this is just as long as we hold above this support trend. So we have the support at the bottom. So as long as we bounce off the support, the rally can continue. And the same thing applies on the daily RSI. But if there are 2 or 3 daily candles closing below the rising support that we have built up for months, so that is the first signal that maybe we are losing the momentum for this bullish setup. So this is for the daily, and if we also hop onto weekly, things are getting more interesting. Well, actually, I have another chart for the weekly price movement. So weekly is really interesting because we have a major trend line. So weekly is actually looking quite bullish. But again, when we're doing TA full analysis, we have to combine different data that we got so that we know are we finally out of the wood? Have we bottomed out yet? So weekly, I'm eyeing this weekly candle very, very closely. So today is Tuesday, and it's just like the second day of this fresh candle. And as you can see, we are on the edge of everything, basically. So this downtrend I drew months ago. So this goes all the way back to 6th of October. So whenever we hit this resistance line, we just like got rejected and it goes lower. So we are at this critical line. If we happen to, if we can close above this downtrend, then things are about to get very interesting. Maybe the joyful rally would last longer than people expect, but like in the grand scheme of things, it's still it's still a bear market. But like maybe this relief rally could last longer if we manage to close above this downtrend. So let's see. Okay. If we manage to close above this, and also this region that I drew from yesterday's show, so around 69k to 72k, that is a region I'm watching. So again, like why this level is so important, because like we don't have a lot of data that we managed to close inside this region. So there were many weeks that was back in 2024. But those are weeks like when we touch and then we get rejected. If we touch again and then get rejected. And here we were below this this region a little bit, but like let's see if this daily candle, because like even back in early March, like there are candles trying to get above this region, but we end up those are just weeks we didn't manage to close above. So there are two critical points for the weekly candle that I'm watching. So let's see how it plays out. All right, so we'll take a short break from here. When we come back, we are diving into more unfortunate news, but like more hack and more heist in crypto that happened. This time it's about Polkadot and other bridges involved. And of course, when you talk about bridge, it comes to DeFi. So is bridges still the safe solution? Like I know we need to connect between different networks, different blockchains. But like every single time when we see heist, it usually involves a bridge. So if you're intrigued, do stay with us after the break.
This is Alex. Alex spends most of his time thinking like a trader, still deciding what to do with his Bitcoin. While Alex waits for the perfect entry, this is Laura. She's watching the S&P drop. Everyone is suddenly a macro expert. She doesn't panic. This is Tom. No screens, no noise, no stress. While Tom focuses on his swing, his Bitcoin focuses on compounding. Because Bitcoiners don't want more dollars. They want more Bitcoin.
I want more Bitcoin.
The best move is letting your Bitcoin work while you plan the next one. Grow by Roxom. One currency, one place.
Oh, I forgot to mention, dividends on Roxom are paid in Bitcoin. Stretch your income, 11.5% paid in Bitcoin.
Stretch your income to 11.5, get 11.5 in Bitcoin and Roxom. 11.5%. 11.5%.
Welcome back to Roxom TV, and thanks for sticking around with us after the break. We're now turning to a story that sounds like a movie script. Imagine waking up and realizing you have 1 billion units of crypto in your account. But when you go to spend it, the money is almost worthless. That is exactly what happened to a hacker yesterday. They managed to print 1 billion Polkadot tokens, so DOT token, but they walked away with a very tiny fraction of that wealth. So let's look at the so-called glitch that saved the Polkadot ecosystem. So the trouble actually started on Monday morning. A security platform sent out a red alert. A cross-chain bridge called Hyperbridge had a massive leak. This bridge actually connects Polkadot to the Ethereum network. A hacker found a loophole in the code. They replayed a very old security proof to trick the system. It's like using a used ticket to get into a concert, but instead of a seat, you get the keys to mint some tokens. The hacker made themselves the manager of the wrapped wrapped contract, and then they hit the print button. Once the hacker had control, they went wild. They minted 1 billion tokens to just to give you guys some perspective onto that. Like there were only about 350,000 of these tokens on Ethereum before the attack. So the hacker suddenly created 2,800 times the total supply out of thin air. On paper, it was worth over $1 billion, but here is where the story gets like a wild turn. The hacker tried to sell all 1 billion tokens immediately, but because that wasn't enough real money in the trading pools, the price of the token crashed 99.9% in seconds. So it went from over $1 to less than a fraction of a penny. Because the price crashed so fast, the hacker couldn't cash out. They even end up trading all 1 billion tokens for just 108 Ethereum. So that would bring down the total profit of just $237,000. So, like, think about it. The hacker stole 1 billion unit asset, but they only walked away with the price of a small apartment. Social media users are calling this a lucky break for Polkadot, like the low liquidity, which usually means a dead market, actually saved the network. How about that? It acted like a natural firewall that stopped the hacker from draining the bank. Now, if you hold Polkadot, you are possibly asking, like, is my money gone? The official answer from Polkadot is no, basically. Like, this hack only affected the wrapped dot on the Ethereum bridge. It does not affect the actual dot on the Polkadot network. So your native coins are safe. The bridge has been paused while the developers fix the hole. However, the news did scare the market. The price of the native dot dropped about 5% as the headlines broke. Major exchanges like Upbit and BitThumb also paused deposits just to make sure no one was trying to deposit the fake hacker coins. This attack is actually part of a very scary trend in 2026. So DeFi security is under massive pressure. Just literally last month, there were 46 different attacks in the crypto world. Total losses hit nearly $40 million, and experts at Static say this might be happening because of AI. Hackers are now using AI tools to find bugs in the code faster than humans can fix them. We are seeing this massive thieves literally just this year. So Drift Protocol, we cover that on Roxom TV a little bit, lost $285 million. Fairness had a $2 million in bad debt. Resolve saw 80 million tokens over-minted. So the tools are getting smarter, but the security is struggling to keep up. So the bottom line is, like, bridges are still the weakest point where hackers love to strike. In this case, Polkadot survived because of a happy incident. The market for these bridge tokens was so quiet that the hacker couldn't even find a buyer that is interesting. And even more interesting is actually if we go to CoinGecko and like for Polkadot, like Polkadot is down significantly. Like there was a point during my crypto journey, I was a big fan of Polkadot, but right now, because like I've been, I mean, for spot price, spot holding on Polkadot, I'm down significantly as well. So it actually hovering around $1, and if we scroll down to all-time high, it just gets more painful. So it dropped 97.8% from its all-time high. That was 4 years ago. Yeah, I mean, Polkadot, I don't know what the team is doing. Looks like it's not coming back whatsoever. So, for this incident that I just covered, like the market for bridge tokens, Kaka couldn't even find a buyer. That is something very interesting and very ironic. But we can't rely on bad markets to keep us safe, right? Like industry leaders are now calling for circuit breakers. They want the ability to freeze a network the moment an exploit starts. Until that happens, the bridge between networks remains a very dangerous place. So do stay safe out there if we could. All right, so let's move on to another very wild and exploding story across social media. It actually involves a crypto billionaire, a Donald Trump linked project, and a massive accusation of a fraud. So Justin Sun, the man who once paid $6 million for a banana taped to a wall, is going nuclear. He is accusing Donald Trump linked project, so Liberty Financial, WLFI, of a massive betrayal. His claim is that this project has a secret backdoor that can freeze your money at any time. And Justin Sun absolutely did not hold back at all. He called the project a trapdoor marketed as an open door. He claims that one anonymous person holds the power to lock your asset. No fault, no fault, no warning, no way to get your money back. Justin Sun is demanding names. He said every investor has the right to know who holds the kill switch to their wallet. WLFI absolutely fired back immediately. They called Justin Sun a liar and told him, "See you in court, pal." But when you look at the structure of the project, it looks exactly as bad as Justin Sun said. Like a single Guardian wallet can freeze funds. A small group of insiders control everything. In the world of crypto, this isn't decentralized finance. This is total control with a crypto label slapped on it. The criticism is coming from everywhere, not just Justin Sun. I mean, even myself, like when WLFI came out, I was telling my community I'm not touching it with a 10th pole. Like, glad I was right. I mean, it actually saved me from a lot of trouble and losing money. So anyways, like this is going wild. Like critics actually, like they usually disagree on everything. Like even critics who usually disagree on everything, joining forces, I would say. So, for example, we have a financial analyst. She posted on X that this is the Trump gift, like it is out of control. And she even compared that to FTX. And we also have another Bitcoin legend, so Eric Fullhills, told Justin Sun it was dumb to even support such an obvious scam. So, question we are asking: why is everyone so mad? Because we have seen this movie before. Like WLFI is using billions of its own tokens as collateral to borrow tens of millions of dollars. That is exactly the same move that destroyed FTX and Luna. When a system tries to stabilize itself with its own collapsing token, it usually ends up in a crash. And if we take a look at the charts, like the numbers are quite grimming. Multiple tokens linked to Donald Trump brand are also getting crushed. So we were talking about WLFI, and for some reason, it's still ranked number 38 in its market cap. So that shows you crypto is actually really small. And personally, I don't believe altcoins, there are much place for us to come back for altcoins. So yeah, altcoins, I don't think it's coming back. And if we actually scroll down to its all-time high, compared to its all-time high, WLFI is down 75%. And that was just like 7 months ago. This is how crazy crypto market is. And another linked project, of course, like the Trump token, the Trump meme coin, is also down 90%. Like prices are collapsing while assets is being sold. If you hold the tokens, you get invites to exclusive Donald Trump events. Lawmakers are calling this pay to play wrapped in crypto. Retail investors buy the tokens while insiders sell the assets. And get this, like the WLFI website quietly removed its entire team page. So no names, no faces, no accountability. But let's be honest about the players here. Justin Sun, of course, he is not entirely a hero here. He has done very questionable stuff in the past. He has faced fraud and market manipulation charges in the past. He was even pardoned by Donald Trump himself after reportedly spending tens of thousands for assets. So to many insiders, this actually looks like one thing. A scammer himself getting scammed. Justin Sun spent the money for influence, and now he's realizing the project he backed is a trapdoor. But just because Justin Sun is involved doesn't make it smaller, and actually making it worse, because this is tied to the highest office in the world. This is exactly where Bitcoin draws the hard line. Bitcoin solved these problems a long time ago. Like in Bitcoin, no one can freeze your funds. There are no admin keys, no backdoors, no insiders. It's just math and code. You hold your keys, you hold your money. Everything happening with WLFI is exactly what Bitcoin was built to eliminate. No multi-sig theater, no governance illusion. So the bottom line is like, this isn't just another crypto blow up. This is political power and branding being used to take money from retail investors. The industry learned this lesson from FTX. The industry learned it with also Terra Luna. Now we are seeing the same patterns over and over again. So strip away the politics, strip away the names, and what you have is a classic pump and dump scam. So that was some big statement that I just made. I hope I will be okay here in Hong Kong. But anyways, we are towards the end of the show. So do give us a follow on X before you go. So my personal X is gemframecrypto_IO. Make sure to follow Roxom TV as well, because we have regular news about the world, about geopolitics, here we have X teases a crypto product. So point being, there is so much valuable content you probably don't want to miss. So give us a follow on Roxom TV. So thank you guys for watching. Make sure you like.